Let me ask you about your appetite for US real estate, given we've just moved slightly off zero interest rate policy in the States. If you subscribe to the fact that low interest rates can lead to asset bubbles, do you think there's still value in the market, or is there a risk?
I think there's a huge value in the market. We went in as Man Capital back in 2009, right after the crisis in Missouri, on a greenfield operation, about 1 million square feet of mixed use, malls, cinemas, office buildings, and residential. And now we're in the phase, we're finishing it off. We're doing another project probably in New York, investing in Manhattan, as minor investors in that one. The first one, we were the majority investor on it with 1 million square feet of mixed use. I think the U.S. has a lot of opportunity. I think the U.S. has proven itself as one of the economies in the world that has gone through, past the problems. The top economies in the world today, I would see that we are looking at, and we have invested as the Mansour Group in the north of $1 billion over the last 4 years.
So the investment you're talking about is a 75-story tower on Fifth Avenue in Manhattan.
Yes.
This is one that you'll rent out, lease out?
This is one that we are going to be investing with some other investors, and we'll go in as a minority investor. It's on Fifth Avenue and 43rd Street in Manhattan.
What type of returns are you attempting to seek from these types of portfolios?
We're always looking at north of about 15% IRR. And this is what we looked at when we invested in Missouri, in the Midwest, with 1 million square feet. The investment there was about $180 million US. So I think that not only the housing market, but as the Mansour Group, we are the largest General Motors dealer in the world today. We're also one of the top 5 Caterpillar dealers worldwide. We look at the U.S. to invest in technology, real estate, among other sectors that we feel has opportunity, especially that the growth rate in the U.S. is in the neighborhood of 2% today.
Michael, comment on this. What's your view on the U.S. housing market?
Well, I guess the question is, when you have this debate about, as rates are rising, why do you have this? I can see why you went in 2009. I mean, unbelievable timing. Yes. But as you're going in right now, you're not hesitating at all with the Fed actually raising rates?
The two top cities, I think, would be New York and San Francisco.
Right.
So the Chinese would be our partners on this project in Manhattan that we are looking at, and other investors also. We're a minority shareholder on this one. But the other one, we were a majority shareholder on. So we want to keep a foothold in the real estate market as well as other investments in the United States. Technology is another area that we look at. We invest with hedge funds, in the technology sector in Silicon Valley and others. And the purpose is always to keep, a bridge and have a presence in the United States.